Thank you, Mark, and a big hello from London. There were fewer weekly key reversals this past weekend than the prior weekend, but they were interesting. In the currencies, we had a weekly key reversal down in US dollar against the Indian rupee, but it was only just. And this week's action so far, well, has not been helpful, as prices have instead tried higher. More on this one in my daily FX video commentaries. Elsewhere, we had an interesting divergence in some of the soybean complex. We've had a weekly key reversal up in Chicago soybean oil futures, which has followed through higher this week. But in bean meal futures, we had a contrary weekly key reversal down, though the follow through lower hasn't really materialized. I suspect this is because the market is seemingly unwilling, even with a weekly key reversal down, to push down through both the 50% Fibonacci line of the October 2021 to March 2022 move at 400.5, as well as the slowly rising long moving average that is just under it, currently at 396.20. More on these in my weekly soybean complex videos. Next is Winnipeg canola futures, where we had a weekly key reversal down last week. Interestingly, this is all confined in between the upper tine, currently at 1048.20, and the middle tine, currently 980.90, of the steep end of May to mid-April bearish Andrews pitchfork. In part, I suspect this was caused by the market's failure early last week to move over the rising medium moving average, currently 1082.60. And at the same time, the move lower has seen the bearish incentive eroded by various congestion lines from 1037.70 and lower, and finally halted by the rising long moving average, currently 1014.90, which is just below recent lows. More on this also in my weekly oilseeds video commentaries. Next is an obtuse one, but one that I've commented upon before, and one that is important in Europe. It is Dutch TTF gas baseload futures. This had a weekly key reversal down last week. What was interesting, indeed especially interesting, about this move was how this was the second weekly key reversal down seen in this market within the last 4 weeks. The previous one, 4 weeks ago, broke the back of the downside of the 100 even level and led the following week to the market pushing down through the very supportive, well until then, slowly rising long moving average, currently at 94.57. This week we are even lower, now testing uptrends of all things. Finally, there was a weekly key reversal up in Chicago live cattle futures. Here we have had a limited follow-on higher, followed by a pullback, followed by a resurgence that leaves us roughly where we finished last week. I suspect this is a first reaction, let's say a delayed first reaction if you like, to there not being a follow-through lower to the monthly key reversal down made in February this year. It is nevertheless an interesting one to watch. I'm always happy to answer any questions with anyone who's interested, and with that I'll finish this section from London. Hope you found these comments useful.